Wait, there's nothing hugely disappointing actually in what Meta did, but there was a disappointment for investors because they had such high hopes. Does that mean you're recalibrating, I guess, your exposure to some of the Magnificent Seven or AI in general, or is it just about being patient?
Well, if you talk about Magnificent Seven more broadly, there is another name in Magnificent Seven that reported misses in terms of the headline, but actually guided up their expectations, and that was rewarded handsomely earlier in the week, right? So ultimately, we're talking about an environment where, when it comes to evaluating the potential for AI, there is greater focus if you look at how markets have been reacting on the guidance rather than on the top line misses or beats. This is what we notice in this particular season, which shows to us that this is still a very forward-looking market, and I think there is greater kind of runway for AI adoption to not only kind of play out further in this Magnificent Seven, but beyond the tech sector in other sectors like healthcare, financials, and industrials as well, which are the sectors that we like. In terms of valuation, people look at how well these names have done, and intuitively they're like, okay, this is too expensive to get in at these levels. But because actually earnings have on aggregate over the last 12, 18 months or so really come through. In terms of valuations, like Magnificent Seven, 90% of their total return the last 12 months can be attributed to earnings coming through. Valuations have not become more expensive versus 1 year ago, and that's the big picture, I think, sometimes that goes unnoticed in the context of the meteoric price appreciation. For all these reasons, we still like the tech theme. We think that there is more to play out.
The use of AI in healthcare has seen remarkable growth in the past 5 years, and it brings with it the potential to reshape the landscape of medical devices, healthcare, and life sciences. This was recognized by leading data analytics company Palantir Technologies, which recently announced a multi-year partnership with Parexel, a biopharmaceutical company that specializes in enhancing and accelerating clinical trials. Under the agreement, Parexel would use Palantir's AI software to boost their clinical trial operations. In today's video, we will go over this deal and discover its benefits for both parties and discuss the future of AI in clinical trials and healthcare generally. But before we do that, if you want to keep up with Palantir's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
The theme that runs through Constellation Energy, Intuitive Surgical, and of course the big guys, Meta, Microsoft, Amazon, that you own, is the exposure and the way that they will capture the potential of artificial intelligence.
It's the big theme right now. AI is so important. If you don't incorporate AI into your company, you're going to be left behind. AI is going to drive earnings efficiencies for all companies, especially companies in the industrial sector like a CEG, or maybe even Intuitive Surgical, taking advantage of the healthcare opportunities that are there to make surgeries more efficient.
But is that a question now that portfolio managers and financial advisors are going to have to be able to explain to clients now is, okay, so you like consumer goods, or you like this particular biopharmaceutical services company, but here's how AI plays into the future of their business. Are they going to have to understand the potential for these companies to grow based on AI?
I think just as we adapted to using a cell phone years ago, or just evolved in the technology sector, AI has been transformative. It's allowed companies to become, as I said, more efficient. But if you look at the advantages of using this type of technology down the road, we need to continue to lead as the United States, be an innovator in these areas. And AI spending in the United States alone is about 7 times more than any other country in the world at this point. That's a really staggering figure because we want to be first. We want to be leaders out there, and AI is going to shape our technology and innovation out there.
As we all already know, Palantir is an AI software giant. The company's technology is seemingly everywhere, from national defense systems, hospitals and telecommunications, to anti-money laundering operations and retail. And now it's making its first foray into contract research organizations, or the CRO industry. Dan Ballard, the Senior Vice President of Digital Enablement and Innovation at Parexel, told Fierce Biotech CRO in an email that Palantir's Foundry and Artificial Intelligence platform are perfectly suited to enhance and accelerate the delivery of safe and effective clinical trials and capable of doing so at scale. Parexel actually has a long history with Palantir as the two worked together over the past year, which helped Parexel understand the potential of Palantir's platform and how it can accelerate solutions for Parexel and its clients, and that's why it decided to sign this deal with Palantir. Notably, one senior medical director at Parexel mentioned that the software has saved 6 to 7 hours per subject matter expert for each study design and has reduced data delivery time by 50%, which is a significant result to achieve. Additionally, Ballard said that Palantir's artificial intelligence platform provides an integrated digital environment capable of hyper-automating manual processes, promoting better data discoverability, and distilling insights from historical trials. This is a huge deal, since all of these are essential capabilities for improving the efficiency and effectiveness of clinical trials, and more importantly, helping Parexel to help their customers deliver much-needed safe and effective treatments to patients faster, which will shorten the time it takes to get new drugs into the market. But what does this mean for Palantir? And why is the data analytics company so interested in the healthcare sector? Let's find out. Hello everyone, and welcome back to Investocracy.
Not that you don't like tech, but two of the sectors that you do like are healthcare and utilities. These are not sexy sectors at all. Or they haven't been.
Utilities is not,
Utilities, energy. What did I say? Did I say
healthcare?
I said healthcare and utilities.
Yeah.
So tell me why you like those. And in healthcare particularly, I think I get utilities, okay? But in healthcare is a big sprawly thing. It can be pharma, it can be biotech, it can be the insurers, it can be medical device companies. Where in healthcare?
So we like...
Why unsexy and why where in healthcare?
So actually, the reason we like healthcare is because it can balance the defensive, but with some of the sexier stuff as well with biotech. And so people have abandoned healthcare because all they want is the AI trend. And so healthcare has broadly not done very well for a long time. But there's a couple of things going for it. One is just cheaper valuation. So back to fundamentals, it matters what you pay for things in this environment when rates are higher and inflation is higher. And it is broadly cheap as a sector. Now, the benefit of that is as well, if something were to happen and growth starts to slow, if the economy does turn over, as a sector broadly, it tends to be more defensive. But then it has this really exciting component of biotech. And if you're looking for innovation and sexiness, absolutely you get that with AI. But the amount of innovation happening within biotech or robotic surgery, there's a ton of growth opportunities within that subsector.
I agree with that. I think AI can be really transformative in healthcare.
During its 2024 GTC event, AI market leader NVIDIA said that the future of healthcare will be software-defined and AI-enabled, adding that around 700 FDA-cleared, AI-enabled medical devices are now on the market, which is more than 10x the number available in 2020. On top of that, the global healthcare AI market, which was valued at $4.8 billion in 2020, is forecasted to reach $88.2 billion by 2028, expanding at a compound annual growth rate of 43.6% from 2020 to 2028. So, there's a massive opportunity for AI companies in the healthcare sector, and even NVIDIA is now working with Johnson & Johnson MedTech to develop new AI applications to integrate into surgical procedures. Just like NVIDIA, Palantir knows how important the AI healthcare market is, and its venture into it is incredibly unique because, as a data analytics and AI software company, the healthcare sector provides the perfect breeding ground to collect patients' data and test and develop AI software to deliver meaningful impact. Plus, healthcare data is often a notoriously challenging aspect for organizations to deal with due to a multitude of problems. For example, the data is often siloed, evades interoperability, and lacks meaningful use, given how challenging it is to analyze cohesively. There's also the fact that most hospitals and other organizations in the healthcare industry aren't really upgrading to the latest tech when it comes to software and data. So Palantir can leverage its niche expertise and offer its services to organizations in the healthcare industry. If you've been following Palantir for a while, you'd know that the company has been really interested in the healthcare market for a while now. We already know that the UK's National Health Service, or the NHS, signed an agreement with Palantir to create a software platform that would allow it to better manage its patients' data, but earlier this month, Palantir entered another area of the healthcare market. The company received 256,000 extra shares of MSP Recovery, a healthcare recovery and data analytics company and a Palantir partner, as payments for outstanding receivables. Now, Palantir owns around 955,000 shares of MSP Recovery, and this is a big deal for Palantir because of the potential synergies with MSP and what the artificial intelligence platform or Foundry platform may be doing to power their operations. Throughout their partnership, the two companies were able to leverage Palantir's Foundry platform to create one of the most advanced healthcare analytics tools, as it provides key metrics for providers and payers by making medical claims data more accessible, revealing information on payer rules, billing cycles, and fraud analysis. Additionally, it delivers insights into how to reduce labor hours, increase efficiencies, and eliminate waste through the discovery of improper payments and potential recoveries. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Okay, Bryn, Palantir on pace to break a 4-week losing streak.
Yeah, I mean, Palantir was an AI company before AI was cool. This is without a doubt. I think there's no other software company that has the scale of the military contracts. And I think it's a misunderstood company because that's what most people think it still does. They continue to get big awards from U.S. and U.S. friendly countries. But really what I'm excited and why I bought the stock is what they're doing on the commercial side. They've been doing these, within their AI platform, these AI boot camps. Last quarter, that was up 70% year over year. Their commercial revenue, just plain and simple, was up 30%. The stock made 3 cents, the earnings 3 cents last quarter. I think this is early days for them. They're hiring a sales team to really go after the commercial traffic. I think that they're so trusted. Their earnings come out at about 9 or 10 days. I think this is one to watch. That has a lot more upside.
Outside of the Magnificent Seven, there is no doubt Palantir has been one of the market's biggest AI winners. Over the past year, the company's stock has delivered staggering returns of over 190% and quickly became one of the significant names in the AI market to keep an eye on. But is Palantir stock a good investment right now, especially before the company reports earnings on May 6th? It's very likely that the biggest winners in the AI race will be the companies that help their customers get the most out of their ever-increasing amounts of data, and Palantir is a company that excels in this increasingly important area. Palantir built its reputation as a valued partner for the U.S. intelligence community, and it continues to provide critical services to the U.S. government and its allies, but it's also working hard to grow its commercial business and acquire more customers in the private sector. In fact, companies are flocking to Palantir for a chance to leverage the benefits of its artificial intelligence platform, because Palantir says that it can help customers perform certain tasks up to 10 times faster with fewer resources by combining its proven machine learning technology with the most advanced AI models and real-time data. Potential productivity gains are enough to convince companies to come on board, and this is now beginning to be reflected in Palantir's financial results, as its commercial revenue increased 70% year over year to $131 million in the fourth quarter of 2023, fueled by a 55% increase in customer numbers. Palantir ended 2023 with just 221 commercial customers in the United States, but investors should expect this number to continue to grow in the coming years, as Palantir recently entered into new partnerships with cloud software giant Oracle and one of Asia's biggest companies, Hyundai Heavy Industries. And now with the Parexel deal, Palantir is extremely well positioned to benefit from its ability to implement AI technologies in multiple industries at once, and we can see it becoming one of the top AI companies in the future because of this. For Palantir's Q1 earnings, which will be reported next week, the company expects revenue of between $612 to $616 million and adjusted income from operations of $196 to $200 million, and both are extremely bullish forecasts as the company made $608 million in revenue and $66 million in GAAP income from operations. Keep in mind that Palantir enjoys consistent profitability as the last quarter was its fifth consecutive quarter of GAAP profitability, and its revenue growth is complemented by an expanding margin profile as the company's strong liquidity position provides it with an extra layer of financial horsepower over its peers and is fueling the engine as it takes on big tech. As long as the company operates from a position of strength in the growing AI market, holding Palantir stock over the long run could generate massive gains for disciplined investors, and the same could be said for the case of buying Palantir stock. But what do you think about Palantir stock? And what are your expectations for Q1 earnings? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Palantir is. If you would like to know more about the latest updates about companies like Palantir Technologies, then go ahead and click on the next video on your screen. See you there.